Have we peaked out, or this party still has some more legs? You joining us from Kolkata or Mumbai?
I'm joining you from Dubai, Nikunj.
Oh, I actually saw high rise, and I just like Kolkata mein does not have high rises. That's why I asked you this question.
That's true.
Okay, now that we know where you're joining us from, let's talk about the change what we've seen in last couple of days. The change is that markets first hit a pause button, and yesterday, for the first time after a gap of almost 4.5 months, it did show signs of some reversal. How should one read into the recent price action?
I think it's quite normal, Nikunj. Honestly, in percentage terms, it's a 1% dip. We are so used to seeing 100-point move on the Nifty being such a big thing, over the last decade, that these days 200 points is basically close to 1%. So I don't think from that standpoint, it was really anything meaningless or significant. And I do believe that the bull markets have this beautiful ability to keep scaring from time to time. Having seen the 2003, 2007 bull market, something similar used to happen because you used to see a large move up, then a bit of a give back, and then new highs. So I think this is a very normal correction which took place from that euphoric round number of 20,000. It just keeps happening all the time. And somewhere in this 19,300, 500 area, the market has a lot of support. I do think that we will stabilize somewhere here and possibly turn around. And everyone seems to be talking about this news flow from the US. Honestly, if you really connect the dots and look at the news flow and look at the charts, you just feel that all of it is quite discounted, and I don't think the market is going to give it so much importance, because even the Dow, I think, seems to have broken out above 34,500 and seems to be setting up for lifetime highs. Now, it might be quite a disconnect with what you've been hearing, but that's what the global charts are. US, Europe, rest of Asia, all looking quite solid. So I think this Indian bull market has not peaked out. There is miles to go even from these levels. Use all dips as a buying opportunity, and somewhere in this 19,300, 500 zone, I think the risk reward once again goes in favor of going long. From an investor's perspective, I think 18,900 is a sort of a base. So till we don't break that number, nothing changes on the structural side.
While the bull market is alive and kicking, in the near term, like you said, we could be in for a pause, and that should not be considered as some kind of a reversal. Now that we've got the big picture, analysis going, let's understand the recent comeback in commodities. The recent comeback, what has happened, let's say in the dollar index, or the fact that, from tomato to onion, from coffee to timber, commodity prices have started coming back. Could that threaten this rally?
You know what? I've always believed that economics and society are two different things. If you have to really discount society, I don't think the Nifty should be trading at levels close to 20,000. But that's a different debate altogether, because markets look at purely economics. And from that perspective, and keeping the liquidity angle in mind, all is pretty strong. I don't think the markets are going to be impacted so much. So I think there will be issues from time to time. Valuation wise also, we've not come to that point which suggests that we are in fraud territory in any which way. And if you actually look at a very interesting chart which we put out in our big picture report, which is the Nifty 50 divided by the Nifty 500, NSE 500, what you'll notice is that this ratio chart is actually in a downtrend for the last 3 months, which means the NSE 500 has done far, far better than the Nifty 50. And I think this trend is going to continue over the next 6 to 12 months, where you should simply ignore the Nifty or the Nifty 50 stocks, because they are not going to give you significant upside. But the NSE 500 has some real amazing opportunities even at these prices. So this bull market is all about broader market strength, and that's where you need to be focused on, and not really look at the index or the top 50 so much.
Participate. If you believe that the opportunity in the broader market is far greater than just looking at the Nifty and the Bank Nifty, what is the best way to maximize and ride this bull market?
I think look at selective pockets which have shown a lot of relative strength. There has been one pocket after another which has taken this market higher, and I think from current levels, my biggest opportunity, the way I see it, is the Bank Nifty. I think Bank Nifty is setting up well for a possible rally. 44,500, 45,000 looks like a base. I see a strong turnaround coming in this sector, led by the PSU banks, because the PSU bank index seems to have broken out after 10 years of staying in a range. So I see the biggest opportunity in the PSU banking space. Preferably the larger names, but even the smaller names could be beneficiaries. But as a whole, I think I see the Bank Nifty moving towards 48,000. Aside of this, I think pharma is still a bigger story. Our working target is 70,000. So I see a lot of upside. And metals, I think metals could be the poster boy or the surprise element of the market over the next 6 months. While stocks like JSW and JSPL have already done quite well and are at lifetime highs, and the commentary has been great. I had the pleasure of meeting the management. I think some of the other names which have underperformed, which is SAIL, NALCO, Tata Steel, are potential dark horses over the next 3 to 6 months.
So banks and metals are two pockets which look interesting to you. Is there a case for IT to bottom out?
I think it is. Now, if you look at it in absolute terms, you might not get that indication that it's going to bottom out, and there are definitely some headwinds. But if you look at the IT index divided by the Nifty, it is at a 10-year support. And I think after Infosys results, a lot of the negatives are already in the price. People are factoring in the headwinds that's coming out of the US and the global markets in general. And we, any which way, live in a very dynamic world. But chartically, I feel that it can only get better from here. But it's not going to be a holistic rally. It's not going to be a rally across the board. So within the top 4, top 6, the ones that we like are TCS and Tech Mahindra. And I believe that these two stocks will stand out and will outperform the IT index. On the other side, if you look at mid-cap IT, there is this digitalization, AI theme-led rally which is taking place across the board, which I think is not going to die down. So mid-cap IT is really the space to be in, where I think all dips are a buying opportunity. And in the large caps, as I said, TCS and Tech Mahindra.
Which are those names from the mid-cap IT space? And you talk to us about SAIL, NALCO, Tata Steel from metals and TCS, Tech M from IT. What about the pharma names?
Well, pharma actually has been a rally across the board. That's the beauty of it. Right from names like Dr. Reddy's, which we covered, I think, a couple of months back, Cipla, Glenmark Pharma, Divis Lab, which I think is due for a much bigger rally, Granules, which I think is setting up for a bigger rally as well. So I really see a across the board rally for the entire space. In fact, we also covered Natco Pharma a month back. And I think all of these stocks were just hammered beyond recognition, till a couple of months back, because it was a 2-year long bear market that you saw in the pharma index. And now looking at the comeback and the ratio chart of banks, pharma versus banks, pharma versus the Nifty, pharma versus the NSE 500, all of these charts are in great shape. So pharma, you can actually pick up anything that has decent fundamentals and it will do well for you. But as I said, the eventual target is 17,000, which is a good 2,000 points away from where we are right now.
The target for Nifty Pharma is 17,000 is what you are saying, which is a 2,000 point away. But talk to me about the auto space as well, Gautam. Has that completely peaked out?
I think it's over-owned, over-analyzed, and I think it's come to a point where it cannot keep running. So risk-reward at a 19,700 index does not warrant getting aggressively into the auto space. Yes, you can stay with it. I'm sure many of your viewers bought in at lower levels. Please stay with it. I think you'll get a lot more upside from here. And we definitely like Maruti, Bajaj Auto and Tata Motors as our best picks. But in case you want to buy fresh, I think there are better opportunities in the market than auto, or for that matter, even an FMCG, which I think could have run its course at this point of time.
Sell anything broadly. That's what your message would be, or your analysis is indicating.
Yes, it is.
Okay. And if I say, how about ideas where you can go short? So the answer would be a big no. I can even make it a no longer, but it would be something like a no, right?
It would be a no, Nikunj, because I think in a structural bull trend, you don't want to capture those 5-10 days of weakness. You rather want to buy the dips and stay with the trend of the market. I know, in today's world of social media, everybody wants to make everything of every day. But I think in a strong bull market like today, you should not narrow yourself to those 5, 7, 10 days of weakness. So I would rather stay with the trend. And as the market gets close to supports, I look for opportunities. And even in a weak market environment, you're seeing so many themes and pockets doing well. So why focus on the short side?
Market peaked out, let's say, was in 2022, late 2021, middle of 2022. What were the charts reading that time? And what are the chart readings now in terms of the technical indicators you follow?
Well, I think those times were very different to today's times, because I think liquidity has taken over completely, Nikunj. I think this domestic liquidity angle 50,000 crores coming into the system every month, and now foreign liquidity coming in because India has been one of the best performing markets in the world. I think that's really aiding this entire move, and the charts and the fundamentals in some sense are adjusting to that. And as I said, it's really a broadly linked bull market, because if you ask me, do you have a visibility of a Nifty 25,000? Honestly, I do not. I don't even have a visibility of more than a 10% move on the Nifty, because I don't think it's important. I think what's really happening is people have realized that the real money or the smart money is now flowing into stocks which are aside of the top 100. And that's where the biggest opportunities are, and that's where the charts are. So indicator wise, I mean, if I have to just talk specifics, the daily RSI on the Nifty made a new 52-week high just a month back. So there are no signs of topping out. I know this market will keep scaring you from time to time, but I think it will just keep coming back. And the moment we get past 20,000, I think my working target has been 20,400. And eventually, if you have to take a 12 to 18 month view, I think 22,400 is coming.
400 at the index level. We talked about a lot of sectors you're bullish on, right from IT, metals, PSU banking space, financials as a whole. But which is that space which you would recommend to book profits, if at all, from, or churn your portfolio to something else? Which is that space?
It would be FMCG. I think the entire FMCG space has done quite well. I see a streak of underperformance coming in there. ITC has been my favorite right from 200 levels. In fact, we've called it on every single interaction of ours. For the last 2 years, we had it as one of our long-term picks. But last week, we actually took it off our long-term picks list, and we've actually moved to metals and pharma. So FMCG is a place where one should book profits. Not to say that it's going to collapse or it's going to fall big, but just that it might get into a longish range, and therefore there could be underperformance. And in a raging bull market, you want to be in those pockets, which are moving well with the Nifty, which I don't see autos or FMCG doing.
Okay, so a bit of underweight coming in on FMCG and autos and metals and PSU and pharma. That's the space to be, because that's how you'll ride this bull market, which is not showing any signs of froth as per Gautam. It's not showing signs of slowing down. These are the opportunities that one should look when Nifty heads to that 22,400 level that he's targeting over the next 18 months. Gautam, a pleasure having you on the show. Very intriguing conversation. Thank you so much for joining us today and talking to us about your outlook on the markets.